mean, a couple of influences I'd point to as to maybe why markets have been so strong over the last few months. One, I don't think there's any doubt that the quantitative easing policies that central banks around the world have been putting in place, most recently Japan, has led to an increase in optimism and an increase in liquidity, which, you know, part of the mechanism by which QE works is that it's supposed to buoy up asset prices, and so that's possibly part of what's going on. I think more generally than that, I think in a number of places around the world, especially Europe, there's a sense that maybe we've turned the corner, that the tail risks associated with the breakup of the euro, for example, are probably rather smaller than they were certainly 6 months ago. On the European front, I could reel off a list of political risks as long as my arm where things could easily go wrong. And that's why when we've been talking to clients, we've been saying, yeah, things are maybe looking a little bit better, but don't assume that the crisis is completely sorted and that everything's going to go away. And then as far as QE is concerned, I mean, I think what's really interesting about the way the market has reacted to the US, some comments that have come out of the Fed, you know, what they've been talking about, let's remind ourselves, is that they're slowing down the rate at which they're adding liquidity. So they're not even talking about reversing QE, they're just talking about slowing down the rate at which they're adding money into the economy. But even that has caused markets to take fright. And so if that's what's going to happen now, what's it going to be like when the Fed, the Bank of England and others really do start trying to tighten, trying to withdraw that easy money, which inevitably they will. And what makes it so difficult is that we're in such uncharted territory. We just don't know how that's going to play out. I think it does, because you take an example like Japan. For a long time, people would have pointed at Japan and say, surely this economy is going to recover, and it just simply hasn't. All of a sudden, Japanese equity returns have been terrific. And so, I mean, in a way, the diversified, cat-weighted portfolio already reflects all of the information that's out there. So really, having an overweight in a particular country, a particular region, there's nothing wrong with that. But remember, you're doing that because you think you've got better information, better views than everybody else. It's not an absolute view, it's a relative view relative to everyone else. Probably this recent surge is taking valuations up to something like normal. It's hard to look very far away from sort of long-run averages, I don't know, 6–10% for equities. But in any one year, who knows? Could be less than 0, could be above 20, we don't know.